Good morning, everybody. Welcome to another day of Market Report brought to you by Mike Bjork. Today is Thursday, September 22nd, the day after the Fed Day. So let's jump right in here. We just got a couple items here, and we'll touch base a little bit on that Fed announcement yesterday. But right now, we'll start off with the weekly jobless claims. So last week, we had 260,000 people apply for unemployment. Forecast supposed to continue, another 260,000 people apply, and they dipped 8,000 to 252,000 people. So still strong numbers here in the terms of jobs. So this is kind of good news here. Fewer people are applying for unemployment. However, we got the existing home sales for the month of August. So back in July, we had 5.38 million existing home sales. When the forecast, they felt it was going to go up to 5.48, and it actually dropped to 5.33. This is a bit of a disappointment, but a lot of this has to do with what they're finding is that there's fewer inventories. The inventories are shrinking lower and lower, so we got less homes out there for sale to even to count as towards existing home sales. Last but not least, we also got the leading indicators. So back in July, we had a nice 0.5% increase, but in the month of August, we pulled back 0.2%. So obviously not too good news for the leading indicators. That kind of gives us a gauge or kind of future insight as to where the economy is moving. And of course, if there's contraction, it's not usually a good thing. So let's go look at the headline news here. Stock market's up. Oil is up. It's up to about $46 a barrel right now. A lot of course, these go hand in hand, the weaker dollar. So when the dollar weakens, the price of oil goes up. It's just tagged to the U.S. dollar. When the dollar goes up, then oil comes down. But also a lot of the stock market's up due to the overspill of the Feds and the BOJ's decisions yesterday. We talked a little bit about the BOJ yesterday, but since the Fed came in, Janet Yellen basically said that things are progressing. She does see a very strong possibility of a rate hike at some point this year, which everybody's pegging that to be the December meeting after the elections. And that's going to be the main thing. They think inflation will rise over the next 2 to 3 years to the 2% level. It can. If you're raising rates, it's kind of hard to raise it. Inflation go up too much. Usually, that's what offsets inflation. So we'll have to kind of wait and see. But they're feeling a bit optimistic where the economy is moving, and they're going to wait for more data to come in before they make that final decision. Most likely at the end of the year, if they will raise rates or not. Bond market, we both rallied. So stock market went up yesterday, went up over 100. Dow was up over 100, and again today's up over 100. We rallied quite a bit here. We broke above the 10-day moving average here. Just touched off the 25-day moving average. And today we basically now we're shooting up past that. So we're up above the 25 and 50-day moving average, and starting to get back into the range we were before we had that big spill here a few weeks ago. So this is good news. What that basically means is rates have improved. So we got a nice improvement in our interest rates, especially over yesterday or even the day before. All right, folks. So this is actually the best rates we've seen in nearly 2 weeks here. So these are so we're in a good position right now for some hopefully more continued improvement on our interest rates here. All right, folks. Have a wonderful day. Thanks so much for watching. We'll see you guys tomorrow. Bye-bye.